We are on the brink of experiencing something we experienced before in the past that that made us really, really, really happy when it comes to the amount of money we were able to make with GameStop, AMC, and some of the other meme stocks. All right. So I'm gonna deep into this article, which is quite interesting, especially given yesterday price action, the day before price action, and ultimately what is going to happen tomorrow, because we have something that can act as a catalyst. And as I mentioned earlier, makes people holding AMC stock and GameStop as well very, very, very happy and smiling, especially as we are on this downtrend. So what is going on? We have the CEO of S3 Partners actually throwing the idea out there that GameStop is a few dollars from going parabolic again, especially if it repasses the $30 mark. Not my words, his words. So let's dip exactly into what he's saying. First of all, S3 Partners, for those of you who don't know, S3 Partners is one of those companies that are publishing market data analytics. All right, these are the guys that are kind of calculating short interest ratio, short interest related data and many other data when it comes to stocks in the market, especially the US market. So they issued this kind of article that is published now on the street, but you can also find it on Yahoo Finance. And he says that they are about $1 to $2 billion in short interest in GameStop, which could act as fuel for a new short squeeze that we already knew, right? So no new information there if you were holding AMC and GameStop for the last couple of years. Now, he added, though, that super high short interest is not necessarily to catalyze a short squeeze. Rather, short squeezes occur when shorts, however many there are, and we all know there are a bunch of them in these two stocks, start experiencing unacceptable losses after a sharp uptick in an underlying share price. I'm going to stop there because this is part one of the good news. What he's saying is a short squeeze is not necessarily due to the amount of people into the short or shorting the stock, all right? And we do know for AMC and GameStop, we have a bunch of them. But it comes when they are kind of put behind the wall, back behind the wall, and they're pretty much, they have no way to go but to get out and cover because the amount of losses they are experiencing is sharp and significant, and they have no choice but to get out of the trade. And that's where they cover, and that's what brings additional volume and makes the share price pop. Potentially, that's what we saw yesterday, because if you look back at GameStop and AMC, as we shared yesterday, October 31st, you can see that it reached 31.22 before actually slowly and gradually being suppressed back down and actually closed even flat. And it was up, at some point, 15%. Same history, same story with AMC, same story with Ape. Why? Because people behind the suppression of these short squeeze of these prices, they know. Why the heck the guy who actually made calculations based on the amount of short sellers with the information that is public. So with the information that is even not public, which is being, which counters for whatever volume is being directed or redirected through dark pools that we don't even know, except people who are trading there, which is the biggest problem in these two stocks. All right. So maybe $30, it's like that cutoff price. And that's maybe why, to my opinion, I may be wrong, but to my opinion, it won't be shocking if that is very accurate reason why we had the share price action we had yesterday, because it already went above 30, dragging and driving Ape and AMC in the sillage. All right. So that's part one. Now, part two, this can actually happen tomorrow or in the next coming days. Why? In the case or in the event, we have very positive news coming from the FOMC meeting. So the Federal Reserve is meeting for the month of November. And we know that after they're going to meet, usually it's 2 days, started today, and it's going to finish tomorrow. So tomorrow after the meeting, they're going to come out and say, okay, this is what we agreed on when it comes to the monetary policy, especially increasing interest rates in the fight against inflation. We all know that the market is already kind of discounting or already accounted or factored in a 0.75% interest rate increase for this month of November and possibly 50 basis points, 0.5% for the month of December, right? So I wouldn't be surprised if the market doesn't think if that's exactly what they have to do. The most important thing is coming next. So 2023. What are they going to do? If they mention anything around the lines of softening or starting to pull back a little bit, because what they did so far already is showing signs, all right? And we saw these coming from big banks such as BlackRock, Morgan Stanley, but also, other influential people on the street, Cathy Wood, Elon Musk. We also had Jeremy Siegel, professor at Wharton Business School, and bunch of other people kind of warning the Fed that they might overdo and kill the entire economy, putting the global economy into a deep recession if they continue to be as aggressive as they are. So we also need to take into account that next week, November 8th, we do have elections. So that's where the political aspirations play a big part in this. Why? Because at the before elections, we know that the current administration or the administration in place would like to give some sort of incentive, or a little bit push for people to continue to vote for them. And we know that with what is happening here with inflation, 401ks, IRAs, people investments, brokerage accounts have been decimated year to date. So to give an impression or a little push for people to continue to believe in the political agenda, I think there's been a lot of pressure put into the Fed into, hey man, you know what? Pause a little bit what you're doing, temporize, man. You're being too aggressive. So we need to, grab some additional votes if people see their 401k balances, brokerage account balances bump a little bit as we get into the end of the year. So that also can play out. And if it plays out, that's where we can see a huge buying pressure coming from the market and funds and everybody getting excited on the news on the Fed. And then boom, the stock market starts to skyrocket and we see AMC and GameStop having another big run as we saw yesterday, which ultimately can will fuel to what Mr. Sloan is saying here. Going past 30, it's game over for a bunch of those, all right? So pure speculation here. Nobody knows exactly what's going to happen, but that's a pretty, good scenario I can see unfolding in our very own eyes in the next coming days, maybe weeks, if everything plays out as expected.